The main markets are under pressure and currently retracing. The good news, in most cases except for the Russell 2000, we're above support, and that's a global phenomenon except for a couple of markets. Is more negative downside momentum to be expected, or are we hitting structural support areas? We'll look through key Tier 1, Tier 2 and Tier 3 charts to assess the market health and stack probabilities. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back KS family. With current uncertainty inside financial markets, especially the US markets, the crypto market is slightly down. However, there's always something coming up, and Tron again is shining in the darkness. Bitcoin and the entire crypto market is just down slightly. The greatest gainers top 100 past 24 hours, Curve, Lunacy, Aptos, Algo, AXS, Mantle, Clayton and Conflux. The greatest losers top 100 past 24 hours, Leo, Rune, Immutable X, Ton, The Graph, SHIB, HBAR and VET. In yesterday's video I talked about recessions and I talked about the sell-off. The main markets are in retracement and the headlines will be brutal. That's because news headlines reflect the current sentiment of the market. There is an expectation that the DXY will gather strength. And you can see masterclass students use the EC method. The Dixie is above resistance. The fiber, the euro dollar, has lost support. You can see that with the Aussie dollar and also weakness with the Kiwi. The cable is a bit of a standout. You can see it's been weakening for some time. As the DXY gains strength, this puts a lot of pressure on the main markets. Preparing yourself for more negative downside is appropriate at this time. At times like this, it's vitally important that you do your three-dimensional risk management. What will you do with a specific trade or investment and your entire portfolio if the market comes crashing down? Will you dollar cost average in? Do you have any dry powder? Or are you fully invested? If you're trading, are you layering down? Or have you gone all in and more under leverage at market? One great way to get synchronized in with the market, because we know when we're synchronized, we're paid. When we are desynchronized, we pay the market. Make sure you look through the Tier 1, Tier 2 and Tier 3 charts to understand where the objective dynamic market structure is. That is, where smart money is buying and selling. Knowing where smart money is buying and selling is vitally important. We can see that Bitcoin is currently trading at 26,487. It's below a structural sell level at 26,566. Structural support exists at 26,335, and down more there's another safety net at 26,296. We can see an upward ceiling, a smart money resistance level at 26,892. Three-dimensional risk management says that even though the probability is for the markets to experience more negative downside, that can reverse very quickly, so we need to keep our eye on these structural support and resistance levels. As well, we need to be open to price reality. The alts gather their direction and strength from Bitcoin, so it's important to understand what Bitcoin is doing and also to understand the internal structure. When we look at Litecoin, it's a little bit of a different structure than we saw in Bitcoin. Litecoin is currently $64.27. It's just below a smart money sell level of $64.55. We can see downward support at $64. As well as another safety net at $63.61. The purpose of these safety nets is literally to catch and reverse price. That's what it's all about inside markets. Price action tends to look really random until you understand CTKS structure or objective dynamic market structure. We can see That with Bitcoin Cash, it sold down until it found safety nets and then it rallied up until it found ceilings. It couldn't get through, so what happened? It moved back to support, and that's where it currently is. Looking at total crypto market cap, you can see just around the end of August we had a really big sell down, but when we put objective dynamic market structure on, where were the safety nets? Where was the support inside the market? You got it. It was right there. It couldn't hold on to it, so it came down and tapped another structural level. But these structural levels, especially when they're thick and congregated, are gravitational. That means it'll pull price back to it. We can see that total crypto market cap is very close to a fairly strong structural support area, and it's just rebounded from one as well. We also have structural support just a little bit down further. This is quite a good thing for the crypto market. If the current price or current market cap was down here and we were looking at a fresh air gap, we could get one of these type of actions, and these can repair pretty quickly, but we have to be aware when you're caught in a negative downslide like this, a lot of people sell. They're not buying, they're selling. That's another reason that it's important to understand where the structure is inside the market overall. Objective dynamic market structure changes each and every month, and when we look at Ethereum, where is Ethereum? Is it being supported like total crypto market cap, like Litecoin, like Bitcoin Cash, or is it something different? Ouch, it's something different. You can see if we just zoom in here, we've got a lot of structural overhead resistance, a lot of ceilings. We're being caught by very minor structural levels of support, but that's a bit of a problem. That means that Ethereum could experience more negative downside momentum than other cryptos. We always do our three-dimensional risk management, but we know, just like we saw with total crypto market cap, Ethereum has been trying to get above this smart money sell area at 1595 without much success. If the main markets continue to sell down, risk off will be the order of the day. When investors get scared, they get scared across every market. We have to always interpret and understand how other people are viewing the market, not just ourselves. We are expecting DXY strength, US dollar strength. Now, what the critical issue is for us is to understand where the structure is inside the DXY. You can see there are multiple smart money sell levels above the DXY. The DXY did rally, but it's being pushed down by these structural levels. If it gets above, there's very light structure overhead, so it could rally. Hopefully, what will occur here is that the DXY will be pushed down. That's not the greatest probability under the sun at the moment. And looking at the other Forex pairs, we wouldn't expect that. We would expect the DXY to get over smart money resistance, to get over this particular level at 105.6376. If it does, the DXY could start rallying. That means that the major indices could, in fact, suffer. When you look at objective dynamic market structure, it's the same interpretation on whatever chart that you're looking at. If we look at gold, which has been marked up with the CTKS method since 1833, we can see that that sell down around the 20th of September was caught by smart money safety nets, but they didn't hold. A lower one did hold at 1919. We came back, just tried to retest and get above this smart money sell area, and we've not been having much success. We're currently 1924.68 with gold, and there's quite a bit of overhead resistance as well. Stacking probabilities is what professionals do. We look at a lot of different charts and say, are they confirming each other? We looked before at the S&P 500 and saw it was selling down. The question is there smart money support underneath this current price structure, or is it a fresh air gap down to that blue support line? Price action looks really random and very confusing until you understand the price is always interacting with structural levels. For example, what happened with the S&P 500 index around this area? If we mark it up with the CTKS method, we understand that there was very substantial smart money support when price was above this, and then there was a fresh air gap. The next safety net was down here, and then the one below it is down here. When you get a fresh air gap, price can fall very traumatically because it's moving from one structural level or zone to another. The good news is that there were actually structural support areas below the current S&P closeout at 43.20. They're from 42.57 to 43.15. Unfortunately, the structure below isn't as strong as this structure was above here, so we could slice through it, but just be aware it is there. Each and every month, I talk about the objective dynamic market structure inside the Tier 1 charts, the Tier 2 charts, and the Tier 3 charts. If you're a member of that service, you also get a TradingView indicator for each of these areas, as well as the video that discusses how price could move for the month. It is really vitally important that you understand where the structure is inside the chart that you're viewing. Knowing where the structure is inside the S&P 500, and we know we're coming up to structural support, but it's not that strong. We also know that we're at DXY structural resistance levels, but if it breaks out above that, it's going to be a little bit traumatic. We know that we're very close to a structural area of support on total, but Ethereum is not looking so crash hot. Because all markets and therefore charts are intercorrelated and interdependent, we use them to stack probabilities. Retail requires certainty, and certainty creates terror. Instead, as professionals, we rely on probability and rules scaling in and out of positions. We've very quickly got an idea of the market pulse and also CTKS structural levels. We will let price be a reality because we're already doing our three-dimensional risk management. If you're only currently looking at a few charts and basing everything off recent indicative price and not a full markup of all price, it's very easy to fall into story-based analysis and one-way decision-making. It's very important that you get as quickly away from retail thinking into professional thinking as quickly as you possibly can. There are always opportunities inside every market. That's why we have abundant thinking. We know that the markets purely reward us with profits when we're synchronized. When we've broken rules maybe that we don't even know about, we incur losses. That's why if you suffer a loss, it's actually a lesson. Dig deeply into it and try to find what is that lesson telling you. After all, you paid for it. You should get the value from it. It's important not to blame ourselves. Financial markets require a learning-based focus. That's why we subscribe to Positive Excellence. Always be kind to yourself and kind to other people. Through kindness you can learn, but more importantly you can experience meaning and fulfillment in life. I'd like to thank Purpuratum for his very kind generosity in offering a CTKS partial masterclass scholarship. The link to apply is in the description of this video. I'm incredibly grateful and appreciative of our global family. There were such fantastic comments in yesterday's video. TF Theta said it's all about being prepared and not scared and having your instrumentation on. Art says the markets are a little bit uncertain at the moment, so saving cash for a capitulation event. I must admit, my friend, I am too. Capitulations can be the most profitable, life-changing things that you can ever experience, but generally it's reserved for people who've been in markets for quite some time. But it doesn't need to be. With knowledge you can take advantage of it too. In the comments today, please let me know what your understanding of capitulation events is. I'm thinking a video on that could be quite useful to you. I'd like to thank everybody who watched or commented. It's just really beautiful to see your comments here. Dinesh said it well. The news has been looking at inflation, now it's going to start to talk about recession. There's always some drama out there to attract people to read newspaper articles or media articles. JT said, "If I hear the word recession, I open a bottle of wine, let it breathe and enjoy a glass of it." Check out the masterclass about recession indicators and notice the news is as usual creating fear, uncertainty and doubt. Thank you for letting me know that you like that really gentle guitar music in the background. As Wabi Sabi said, it's back. We have such an incredible global family. If you would like to, if you're a little bit shy, just reach out and say hi in the comments. We'd love to hear from you. Thank you for everybody who commented. Our community is just incredible. If you like this kind of content, please subscribe and just drop a like or smash that like button. If you have any topics you would like me to cover off, please leave me a note in the comments. Kate and I are very grateful and appreciative to know you and to be here sharing this time together. And we look forward to catching up with you in the next video. Bye for now.